Welcome to the deep dive. Today, we're jumping into something that sounds a bit technical, maybe, but it's got real world implications for a company many have heard of, Tilray brands.
Yeah, they're pretty big in the beverage, cannabis, and wellness spaces.
Exactly. And we've got their latest press release just came out. Our mission really is to cut through the financial speak.
Get to the core of it.
Yeah, figure out what this announcement actually signals about Tilray's direction, their strategy, understand the playbook.
Precisely. We're not just like reading the headlines back. We want to dissect this thing, understand the potential moves down the road.
Okay, so the main event, the big piece of news, is this proposal for a reverse stock split.
That's the one. A financial maneuver that could have some interesting ripples.
Right, a reverse stock split. So if you're not familiar, maybe think of it like this. If you have, say, 10 shares worth $1 each, a reverse split might turn those into one share worth $10. The total value might start the same, but you have fewer shares.
Good way to put it. And Tilray announced this plan on April 17th, 2025. So it's very current.
Hot off the press.
And that release also set the date for a special meeting of stockholders. That's June 10th, 2025.
Okay, and how are they doing that meeting in person?
No, it's virtual, a live audio webcast. You can find it through their investor page on Tillray.com.
And the main topic for that meeting is, well, this reverse stock split, I assume.
You got it. That's the big vote on the agenda.
So what are the specifics? What kind of split are they actually proposing? Is it like a fixed number?
It's actually a range. They're asking for approval to do a split somewhere between 1 for 10 and 1 for 20.
Ah, okay. So flexibility there.
Exactly. It means for every 10 to 20 shares someone holds now, they get one new consolidated share. The board gets to decide the final ratio later.
Based on market conditions, I suppose?
Yeah, things like that. Gives them some wiggle room.
And the press release mentioned something important. The total number of authorized shares won't decrease. Why is that significant?
That's a key detail, yeah. While they're reducing the number of shares actually out there trading,
Actual vote, yeah.
right, keeping the authorized number high means they keep the ability to issue more shares later if they want to.
Like for raising money or maybe acquisitions.
Exactly. It's about maintaining that financial flexibility for the future. Strategic options.
Okay, so that covers the what. Let's get into the why. The CEO, Irwin D. Simon, laid out some reasons. What stands out from his explanation?
Well, there are a few layers to it, which is interesting. First, he talks about aligning their share count with companies of similar size and scope.
And why does that matter? Perception.
Kind of. A higher share price can sometimes make a company look more, let's say, substantial or stable. It can affect how analysts see them, how investors perceive them compared to peers.
Okay, makes sense. And the second reason?
This one seems pretty critical, short term anyway. He mentions making sure they comply with NASDAQ's listing requirements.
The minimum bid price rule.
Exactly. Exchanges like NASDAQ require stocks to stay above a certain price, usually $1. If it drops below for too long,
You risk getting delisted. So a reverse split is a common tool to fix that.
it boosts the price per share back up over the threshold.
He also said it would position them better to execute strategic plans. How does the share price itself connect to that? What kind of plans?
Well, think about it. A higher, more stable-looking share price might boost overall investor confidence.
Right.
And importantly, you can make the stock more attractive to institutional investors, big funds, pensions, etc.
Why them specifically?
Many of them have rules, sometimes internal policies, that stop them from buying stocks below a certain price, like maybe $5, so-called penny stocks.
Ah, okay, so this could open the door to a whole new class of potential investors.
Potentially, yeah. Broaden the base, maybe improve trading liquidity over time, make it more appealing.
And they also mention other benefits, like stabilizing trading and cutting costs. How does a reverse split save money on the annual meeting?
All right, that's an interesting one. When you have millions and millions of shares outstanding, often held by many, many individual stockholders.
It gets complicated.
Yeah, managing all the communications, the proxy voting materials, mailing things out for the annual meeting, it adds up.
So fewer shares likely means fewer individual stockholders to service.
Exactly. They estimate it could save them over $1 million a year just on those administrative costs related to the meeting.
So it's not just about the stock price itself. There are some operational benefits too.
Seems that way.
Now, it's really important, I think, to stress that a reverse split isn't automatically a bad sign, right? The company isn't necessarily failing.
Absolutely not. And the press release actually provides some context on their financial health right now.
Yeah, what did that show?
It looks pretty decent, actually. They highlighted that they've cut their total debt by around $76 million so far in fiscal 2025.
That's quite a chunk.
It is. And their net debt relative to their adjusted EBITDA over the last year, that ratio is less than 1.0x.
Which generally suggests debt is quite manageable compared to earnings.
Yeah, it's generally seen as a healthy level. Plus, they mentioned having a good amount of cash and marketable securities,
How much was that?
over $248 million as of the end of February 2025.
Okay, so they're not strapped for cash.
Doesn't seem like it. And they emphasize this gives them, strength and flexibility for strategic moves, maybe even acquisitions.
So putting that financial picture together with the reverse split proposal, it changes the narrative a bit, doesn't it?
I think so. It makes it seem less like a move born of desperation,
And more like,
more like a calculated strategic step, maybe tidying up the share structure, improving their profile for investors, making sure they stay compliant with NASDAQ, all while having a solid base to build from. Positioning, really.
positioning. Okay, let's zoom out then. Think about Tilray's bigger picture, their strategy. How do they describe themselves?
They call themselves a global lifestyle and consumer packaged goods company. Pretty broad, focusing on beverage, cannabis, and wellness.
Global is right. They mention operations in Canada, the US, Europe, Australia, Latin America.
Yeah, wide reach. And their mission statement talks about being a leading premium lifestyle company with a house of brands.
A house of brands. How many are we talking?
The release says they support over 40 brands across more than 20 countries. It covers cannabis, yes, but also hemp foods and craft beverages. Think Sweetwater Brewing, Montauk Brewing, they own those too.
Right. They've diversified quite a bit beyond just cannabis. So how does the reverse split fit into that broad ambition? A higher share price helping them become a bigger CPG player.
It certainly could. I mean, if you're planning to grow, maybe acquire more brands,
Yeah.
having a higher stock price can make your stock more valuable as currency in those deals. Make the acquisitions potentially easier or less dilutive.
Okay, so it could be a tool for M&A.
Could be. And just generally, a more respectable share price might lift their corporate image, help attract partners, maybe even talent. In the CPG world, perception matters.
Definitely competitive. Okay, practical point now. For listeners who are actually Tilray stockholders, the announcement points them to something called the proxy statement. Why is that document important?
Oh, it's crucial. The proxy statement has all the official details, the full rationale for the split, potential risks, how the voting works for the special meeting, everything an investor needs to make an informed decision.
And they can find that
on Tilray's website, under the Investor Relations section, Tillray.com. Easy enough to find.
Good. The press release also had the usual boilerplate stuff, right? Forward-looking statements, non-cap measures. Just quickly, why should people pay attention to that?
It's standard, but important. Forward-looking statements just means anything they say about the future plans, expectations isn't guaranteed, lots of things can change.
Risks and uncertainties.
Exactly. And non-GAAP measures like adjusted EBITDA. Those are numbers they calculate differently than standard accounting rules, or GAAP.
Why do they use them?
Companies argue they give a better view of underlying performance, excluding certain items. But the key is, they aren't standardized. You should always look at them alongside the regular GAAP numbers to get the full story. Don't rely on them in isolation.
Good advice. Okay, let's try and wrap this up. What are the main takeaways from this deep dive into Tilray's plan?
All right, so Tilray is proposing a reverse stock split ratio between 1-for-10 and 1-for-20, pending shareholder approval in June. Key reasons given. Look more like their peers, stay compliant with NASDAQ, attract institutional investors, and even save a bit on admin costs.
And importantly,
This comes at a time when their finances look relatively stable, debt down, decent cash pile. So it feels more strategic than desperate.
right, positioning for the long haul. So the big question for listeners to chew on is, how will this financial engineering actually impact Tilray's long-term game plan? Their success in those competitive beverage, cannabis, and wellness markets.
Yeah, it's about market perception, investor reaction, and ultimately how well they execute their strategy going forward.
And if you want the nitty-gritty details, or if you're a stockholder who needs to vote,
head to Tillray.com, Investor Relations, find that proxy statement.
Okay, final thought then. Given Tilray's already diverse portfolio beverages, wellness, not just cannabis, what could this move signal about their bigger ambitions? Are they positioning themselves for something larger in the whole consumer packaged goods arena?
That's the really interesting question, isn't it? Where do they see themselves 5-10 years down the line? Definitely something to watch.
Indeed. Well, thanks for taking this deep dive with us today.